It's just pretty much flat on the day. Up 2 bips. It's very impressive. We have jolts in the morning. ES a little bit more bearish, closing below the prior week close, down 2 bips from here. Came fairly close to retesting VWAP there at the end of the day, but yeah, pretty much a straight sell off all the way from like 2 a.m. So probably driving that sell off. The announcement of the QRA, obviously dollar up 100 points. Top end of the yield curve moving up, with the belly of the curve moving up a little bit as well. Correlation actually increased pretty much all day long. So, definitely some dispersion being levered up. And that makes sense with tech earnings at the back half of the week. We're probably gonna continue to see correlation drive down until that's realized. However, if everyone over leverages into tech, the MM's going to end up longer delta than they need to be. And when the IV crush happens into the end of the month, it could end up being kind of bearish. Commodities not doing too hot today. Precious metals, copper down, oil up a lot. Oil up almost 300 BPS. Still no significant moves in bond volatility, but we expect it to be low. Carry trade leverage up from last Tuesday, back to about 887, up pretty sharply at the short end too, above 7x. Forward yield on volatility is still staying pretty flat, around like between like negative like 16, negative 10. Not seeing demand for long vol pickup anywhere in that range. Skew fell pretty sharply Friday, which may have helped contribute to some of our sell-off today. A little bit more out of the money put demand, or like those short puts being bought back or expiring. Breadth's still pretty tight, although stocks above their 20-day average. Kind of low. Probably a little lower after today, given that YM, like Dow and Russell, sold off a bit. NQ really the only beneficiary of today's price action. Volatility getting close to back to like Feb lows out here on VX. But over the last 2 days, we do see increased correlation between VIX, cash VIX, and so we might be starting to see some demand for volatility turn around after the end of July. Fed fund futures pricing in a bit fewer rate cuts mid 2026, but flat on the other expiries. See the bear steepener picking back up, bouncing today with the yield move up in yields at the top end of the curve. And well, we got a rejection, but not a significant enough rejection to say that the top here is lost. Obviously, JOLTS data tomorrow is going to be fairly significant. I would say a failure back below 6360 and the prior or back below 6300, and maybe fill in this gap here at like 63 would be the first signal that we're getting some downside. We don't have that yet, so just pay attention to that level pretty much. I would say closing under 6400 today wasn't a great look. And if JOLTS data doesn't indicate Fed rate cuts, things could get a little spicier tomorrow, possibly setting a lower low. That's about it. Yeah, just rotation into tech. Everyone's chasing the dispersion into earnings, so they're gonna like chase the IV bump. No. Looks good. It's up like 1.3% today. I know they have earnings, but like I don't expect I don't expect that to be super crazy. Possibly slightly better. I mean, they're undervalued, so if anything in their earnings points to revenue increases in the future, I think that's going to be obviously a good look for them. Might kick off a period of accumulation after kind of distributing out down here. But I still think there's going to be plenty of time on this. I'm not in a big rush. Anyway, yeah, that should be about it. Thank you guys for tuning in. I will see you tomorrow. Yeah. Have a good one, guys. Later.